Central Bank, Bill Gates partnered to boost financial inclusion drive. Nigeria's public debt hit 49 trillion naira. Economic zones attracted $364.6 million foreign direct investments in 4 years, says NEPSA. Asia market mix has all gains after aborted Russia mercenary rebellion. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Bakar, your guide. Now let's bring you up to speed with business development. The acting governor of the Central Bank of Nigeria, CBN, Folashodun Shonubi, says the Apex Bank will continue to collaborate with the Bill and Melinda Gates Foundation and other development partners to explore innovative solutions for driving access to finance. Speaking on how to deepen collaboration on financial inclusion in the country, Shonubi pointed out that though much progress had been made in various aspects of financial inclusion, some challenges still remain in attaining the desired level of financial inclusion in Nigeria. He therefore called for greater partnership between the bank and the foundation. Co-chair of the foundation, Bill Gates, highlighted the foundation's focus areas for continued engagement in Nigeria to include health, agriculture, and financial services. He expressed satisfaction that support from his organization is catalyzing developmental action in the country. Now, the Debt Management Office, DMO, says the total public debt stock of Nigeria as at March was 49.95 trillion naira, $108.30 billion. And a statement obtained from the DMO official website, the total debt stock comprises the external and domestic debts of the federal government, the 36 states and the Federal Capital Territory, FCT. Also, the country's total debt for the preceding period of December 21st, 2022 was 46.25 trillion naira, indicating an increase of about 3 trillion naira. The total debt stock, however, excludes the federal government's 22.719 trillion naira ways and means advances of the Central Bank of Nigeria, whose securitization was approved by the National Assembly in May. Now, last week, President Tinubu joined world leaders on the consensus for redesigning the global financial architecture, which will favor poverty reduction, debt reconstructing or cancellation, and more consideration for vulnerable countries affected by climate change and COVID-19. To speak on the benefits of this to Nigeria's economy is an economic analyst, Niyi Akisiju. You're welcome to Business Express, Mr. Niyi.
Thanks so much. It's a privilege. Thanks for having me.
Okay, the summit may have come and gone. Well, the summit drew up a new financial order that will scale up finances and support developing countries for energy transition. Now, how would you react to this?
Well, the summit facilitated a sort of advocacy engagement for Mr. President, especially around, as you noted, energy sufficiency. The fact is that over the past so many months, there had been a drawback by international investors on the back of of course, of what I call metropolitan capital over concerns regarding climate change. So there have been this issue of zero emission, targeting zero emission, and to that extent, drawback from investing on crude oil, to put it in simple language, and therefore it had impacted economies like Nigeria and other economies in the developing and some emerging economies, as it were. Now, there is now a need to start talking about what is known as the transition energy, as it were. Nigeria has an abundance deposits in gas, and the advocacy is now about what should be the transition energy. So for the president, that was an opportunity to sell gas as transition energy for the world, especially for the developed world. And to that extent, where it is embraced, you have investors coming in to invest in gas exploration and production, and to a large extent exportation, which will also, of course, earn Nigeria more funds. The concern of Mr. President had to do with the fact that countries in Africa are energy deficient, and therefore it is affecting the poverty level too. So whereupon the international community, as represented by the G7 through to the G20 group of economies, whereupon they refuse, to accept gas as a transition energy, it will impact in grievous manners energy sufficiency and dependency in African countries. So that advocacy was well received by the international community, and we are hoping that going forward it will stimulate and incentivize international investors coming into African countries, especially to Nigeria, where you have perhaps one of the largest gas deposits in the world. And again, against the background of the removal of the subsidy, I think that is one area, removal of subsidy on petroleum products, that is one area Nigeria had become quite popular over the last few weeks that the president made a pronunciation on his, in his inaugural address, made a pronunciation about the removal of fuel subsidy. The international economic and corporate communities are excited, and that was quite exhibited during the summit, especially during engagements with world leaders. We saw videos of how the President Macron, the president of France, embraced Mr. President. It's a clear show, a manifestation of how popular the president had been for taking that courageous decision in withdrawal of fuel subsidy. And again, in this withdrawal, gas is going to play a role because, of course, the price per unit in terms of liter of petrol had gone up, and we are seeing gas as an alternative, either at the level of compressed natural gas or at the level of liquefied gas. So the use of gas in the interim is important for Nigeria going forward, and that advocacy by the president to the international community was necessary, and thankfully it was well accepted.
Well, just as you said, you mentioned the issue of sustainable or renewable energy. Poverty is also a focus of the summit. And how does this align to Nigeria and other developing countries' priority in addressing poverty and climate finance?
Of course, there had been a long debate over climate change, poverty, and other pertinent concerns to the economy, to developing world economy. But for Nigeria, specifically, as I mentioned, one, the need for energy security, it's very important, as the president canvassed. And of course, there's also a derivation of energy security to the extent of talking about provision of electricity, which is a major infrastructural deficient point in the growth of the Nigerian economy. We had a history of low generation, distribution of electrical power, and that is impacting production and productivity. And the exit point impact for the population is talks principally to low production and productivity, which again impact the people in terms of poverty, because low production leads generally to low employment opportunities, because again most companies are not earning enough to expand, to reinvest and expand their operations, and because they are not expanding their operation, some are actually constricting, some are actually closing down, and it means as they close down businesses and operations, they are also laying off workers, and that has a multiplier effect on the economy. So for what we had, especially as reported by the president, Dr. Adesina, the president of the Africa Development Bank, there was a direct engagement between himself and the president, and of course other investors, on concerns on electricity supply generation and all that, and how interventions can be made by foreign direct investors, concerns around agricultural processing, agricultural industrial processing complexes in Nigeria, how to explore and exploit the natural resources, the agricultural resources in Nigeria, and of course a commitment had been made by the AFDB on this note to the tune of $520 million to invest in Nigeria. There's also concern around infrastructure, and again the attraction now is that the harmonization of the different windows, foreign exchange windows, by Mr. President, had also impacted the impression and perception of international investors, and they are excited, as it were, by what Mr. President had done. And he was able to give a full report on this, both to the investors, to the international investors, and to Nigerians in diaspora, who are also a major contributor to the Nigerian economy through their yearly remittances, because those yearly remittances, when they increase, they impact the economy, and then through different channels, and of course through different activation, also impact the level of poverty, as it were, in terms of cycling out more people out of bad poverty by through provision of forex for industry, through provision of forex for social activities.
Okay, you actually talked about the AFDB. I understand that the president also had engagement with the European Bank for Reconstruction and Development, and which he said that Nigeria is actually ready for business. Are we actually ready for business?
Yeah, we are ready for business. It is as if we've not been ready for business. Forget that we have had a history of global impact on the local economy, and therefore we had a constriction of sorts. But we now have a president who determined to open up the space, and by opening up the space, send the right signal, to the international investment community. One, and which is important, that if you import your capital into Nigeria, you will be able to take it out of Nigeria when you are ready to go, either at the level of portfolio investment or at the level of direct FDI investment. FDI investment, the foreign direct investment, is what we usually canvass for, because it's that form of investment that takes a long while to gestate and of course to grow, and it is settled within the national economy and has direct multiplier impact on the economy. And portfolio investment is also important because it helps the immediate, either in terms of foreign exchange, enhancing our foreign exchange reserve, enhancing the capacity and the capabilities of the stock of the capital market, either at the level of the monetary or the equities capital market as it were. So by creating this willing buyer, willing seller atmosphere through the harmonization of the windows, it helps more investors come in, because for either portfolio investors of FDIs, they are looking at the value of returns. One, the general belief that at a pegged rate, the Naira was overvalued. This new rate, when the market eventually finds or discover its price level, the transaction price level, would be the market rate, and therefore there's that comfortability in terms of predictiveness and in the way they transact. And after transacting, you know that you bring in your dollars or whatever foreign exchange you have brought in, you are also able to take it out. Unlike now, when actually close to 3 billion is said to be tied down in different segments of the economy, brought in by foreign investors, either at the level of the airline operators, for instance, or some investors in the capital market, in the stock market, that had actually sold off their positions, but to take out the money had been difficult because of limited access to foreign exchange.
Now another issue is somehow unfortunate that most developing countries maybe went to the summit thinking that maybe there will be something like debt forgiveness, and I don't know what's your thought on the debt pause?
Well, there may not be debt forgiveness now, because the composition of debt, sovereign debt now, had changed for instance, to the before mid 2000. Historically, we have always had what we call the London clubs of creditors and the Paris club of creditors, and those are mainly debts that were channeled through developing countries, to the developing countries through bilateral and multilateral organizations like the IMF, World Bank, and so on and so forth. But now you have a new mix, especially the Eurobond market, where it is private international capital. You also have China coming into the mix. You also have private commercial concerns in that portfolio. So to a large extent, you really don't have a sovereign to talk to. It was easy to talk to sovereigns. It was easy to talk to the UK government before in the
But now they are saying that you can now, when you're confronted with the issue of maybe flooding or any other natural disaster, you can now just pause your debt payment and focus on the immediate problem rather than having to continue paying.
Service your debt. Well, it's I think it's a thinking on as a proposal. There's yet to be a consensus on it, because don't forget, as I noted, the debt portfolio now, it's about 25% is made up of international capital, the Eurobond. And to that extent, you are talking to individuals who don't hold any form of sentiment or sentimental relationship with other sovereigns. As far as they are concerned, they are only looking at the returns on their investment, or on their on the returns on their investment. So going forward, there may be a need, and that is why it is called a new global financial pact. Yes. There will still be a need to talk, to this diversified, divergent the creditors, as it were. There's a new format, there's a new community of creditors globally. And in resolving how to address challenges of high debits, high debt in developing and emerging economies, there is a need for that consensus by these different groups of creditors.
Okay. Thank you very much, Mr. Nia Kisuju, economic analyst. Thank you for sharing your thought with us.
A pleasure as always. Thanks so much for having me.
Now, moving on, how did stocks fare last week in Nigeria? Let's see in this report as put together by Muplanda Kok.
Last week was another positive week for the equities market in Nigeria as the NGX All-Share Index appreciated by 0.34% to close the week at 59,206.63 basis points. Market capitalization also increased to 32.237 trillion naira. A total turnover of 3.3 billion shares worth 41.9 billion naira in 39,764 deals exchanged hands last week by investors on the floor of the exchange. The financial services industry, measured by volume, led the activity chart with 2.515 billion shares valued at 23 billion naira traded in 19,895 deals. The oil and gas industry followed with 162.2 million shares worth 4.174 billion naira in 2,953 deals. The third place was the conglomerates industry. Universal Insurance, United Bank for Africa, and Guarantee Trust Holding Company were the top three equities for the week, and they jointly accounted for 865.6 million shares worth 12.1 billion naira in 4,786 deals. All other indices finished higher with the exception of NGX Lotus 2, which depreciated by 1.26%, while the NGX SM index closed flat. A summary of price changes shows that 62 equities appreciated in price in the week. 35 equities depreciated in price, while 59 equities remained unchanged.
The Nigerian stock market began the week on a positive note as the all-share index ended trading for the day at 59,477.7 basis point. 334.3 million volume of securities valued at 7.5 billion naira were traded in 5,637 deals, while market capitalization stood at 32.3 trillion naira. Let's now take a trip to the global market, and Nekako is our guide.
Asia Pacific market started the final week of June bearish, even as US market snapped a multi-week winning streak on Friday. Hong Kong's Hang Seng Index extended last week's losses to fall 0.51%. The Shanghai Composite closed down 1.48% at 3,150.62, while in Japan, the Nikkei 225 reversed earlier gains to close 0.25% lower. In Europe, markets opened marginally higher before falling into negative territory following a downbeat week. The DAX in Germany fell 0.23% in early trade. UK FTSE also logged losses, while the French CAC rose marginally. In the US, stock futures slipped Monday as Wall Street looked to see if the market rally could find more momentum in this final week of June. Futures tied to the Dow Jones Industrial Average ticked down 12 points. S&P 500 futures fell 0.11%, and Nasdaq 100 was also lower by 0.2%. Stocks in Africa were mixed, with South Africa's JSE Africa Top 40 declining 0.3% to lead losses in early trade, while Ghana's GSE Composite led gains at 1.08%.
Now, before we go look at the official exchange rate of the naira to the dollar and other currencies. Now, this is where we end this edition of Business Express for the day. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. Business Express returns on Tuesday by 9:30 in the morning. Thanks for your company.